It is an honor to be here. So thank you so much for inviting me to be on.
Definitely. Well, I was looking at the calendar today, and oddly enough, I got the episode that ends the halfway through the market year. So, what are your
Yeah.
thoughts? What's going through your head with this so far this year?
I think that this is one of those I almost feel like it's a cliche, but it's this year is one of those years where the market's just climbing that wall of worry. I pull up I saw a lot of negative news this past week on Nvidia, which we've owned for a long time, and it's like I just feel like, these the big bad boys that have been running northward are just getting, rocks and tomatoes thrown at them. Because I think people are maybe partially frustrated with the fact that they won't stop going up. And then when you start to see the trend bend at the end, I think that people, they want to be really quick to say the trend is over when it's like, well, this job would be pretty easy. In fact, we wouldn't have a job if it just went up in a straight diagonal line, right? So,
No, definitely. Do you have any thoughts for the second half of the year, especially with the election coming up?
I mean, I think there's always the possibility that we see kind of a stall this summer. I think a lot of that's going to have to do with how things continue politically this year. It's an election year. It's big news, obviously, that it's gonna get worse, or not the market, but we're gonna get more and more of what we don't want to see, which is political commercials on our streaming news and so on and so forth. So, I do think that it wouldn't be surprising at all to see kind of a pause, a pullback. I don't think we're going to see a big correction, but I do think a pullback would make sense. This because the market can't just go up like it's gone without the little pause we had in April of this year. Something like that would be completely reasonable to me. And then, but I do think that as we get closer to the election and the third and fourth quarters should be probably pretty good. Just we just look at seasonality statistics and history and. So yeah, I mean, I think I'm pretty optimistic. And when we look at that the survey I get every week that I fill out, it's I'm pretty leveraged. So
Perfect. In the survey, you mean for the name exposure index?
yep.
Awesome. Well, that is a good segue to bringing that up here. All right. Can you see the name exposure index on your screen?
I can.
All right. So for anybody who doesn't know, name exposure index represents the average equity exposure for our name members. And last week's exposure number came up at, or no, this week's is actually 85.44. And last week was, it looks like it was 86 point, or no, 85.26. So
Yeah,
yeah, that's not much of a change. I
not
mean,
much at all.
biggest change I see here is whoever was 200 or leverage bearish is now only, just normal bearish here. It's the biggest difference I see.
Plain
So
bearish. Yeah.
yeah, always fun to watch this. Just kind of see how it's going up and down and seeing where we are at Scarecrow. We're big on the leverage. We're leveraged up right now, so
Yeah.
we're on
Same.
yeah. So we're on the complete opposite side.
Yeah.
Um, do you have any other thoughts on this? Kind of.
I mean, I always think it's interesting. I mean, obviously, this is a conglomeration of a bunch of different opinions, and I think that one of the things that makes the market so great is that there are differing opinions. I mean, whenever you're buying a stock, there's somebody else that's selling those shares to you. So, I mean, somebody has to disagree, or we wouldn't have a market. So, but no, I think the only other comments I think I'd make um, on the market as a whole would be in the bond sector or bond asset class, which would be just to say that we're still kind of waiting to see if that downtrend is changing. Now it's starting to look a little bit, right now when you look at like TLT for instance, it's starting to look a little bit like it did, not even a year ago or so, and but we're gonna have to see what happens with interest rates at the end of the day. So, in the meantime, it's been really, really nice to get 5.4% risk free. That hasn't sucked.
Definitely. Well, I'm going to stop sharing this here because I know we got an amazing presentation that you actually did at the NAAIM conference back in April, and I I wasn't able to be there. My second son was arriving somewhere around that time,
Nice.
and yeah,
Congrats.
thank you. And but my team members were there, and it was actually one that I remember them talking about when they came back to the office. So when I heard that you could talk about it again, I'm like, sweet, now I get the knowledge that they got, front and center. So I'm excited. If you want to share your screen, we can get rolling
Sure.
with that.
Of course. Yeah. Let's see here. All right. We're off to the races.
Yes, I see it.
And I do have my quotes teed up, by the way. I didn't want to forget about having my quotes, which I could never pick one quote, by the way. There's no way. I love quotes. I collect them. But anyway,
Definitely.
I
Yeah, there was a ton
digress.
of them.
Yeah. All right. You just want me to run with it?
Yeah, just go ahead, and if I have any questions, I'll let you know.
Okay. So this is a summary. I did cut this down a little bit just for the sake of time. The presentation at the NAAIM Uncommon Knowledge Conference in Orlando was more along the lines of 45 minutes. And honestly, if I'm being completely, honest with myself, I mean, I was flying. So, I mean, I was talking pretty fast to get it all done in 45 minutes. And I didn't even share everything then. Like I hit a couple of slides because I felt like it's probably going to be overboard. So today this is even more cut down just because I want to get some of the main points out and share those good, so a few golden nuggets, but at the same time, not take too much time up here today. So hopefully people enjoy it, get something out of it. If they have questions, of course, feel free you can email me at the end, my contact information. You can email me personally. Um, and I am starting a consulting program to kind of help teach advisors and advisory firms, primarily solo advisors and micro teams, so the smaller firms grow their assets under management and have a happier work-life balance. So, but the whole thing started it with by total accident. It wasn't supposed to happen. It was a friend of mine named Leo Nicotera, who I've known for probably 18 years now at this point. We probably talk once a year or so, just to chit chat, catch up. He lives in New York. And he was just struggling. And he struggled in the past, but this particular time last summer it was especially, I don't want to use the word depressing, but he was bummed out. I mean, he asked how things were going with us at our firm, and we were having a record year last year. We're having another record year this year. And I think he just got quiet on the phone, and I said, hey, what's going on? He goes, I don't know. He's like, we haven't grown in 10 years. He's like, I feel like we do all the right things. We take care of our clients well. We give great service. We treat them like family, but I just feel like we can't get new people in the door. We can't grow. And so, as it says here on the screen, but he was frustrated. He was bored. He had his daughter and his son-in-law brought into the practice, and being that they're younger, they're looking for stimulation and excitement, and they want to make an impact. But then when you're not growing, I mean, it's kind of hard to make an impact, right? Um, so real smart guy. Like everybody listening to this presentation, everybody who listens to or watches NAAIM Confidential every week, or comes to a NAAIM conference, any technician, you cannot be unintelligent and do what we do. It's not possible. I mean, you have to have quite a bit of intelligence, but at the same time, we can't be good at everything. And I think that I think that's part of the reason why people join NAAIM, is because they want that camaraderie and they want that support from their peers and to constantly challenge themselves to be better, and get better at their craft. So this is just a different angle. Instead of being better at technical analysis, this is, how great is technical analysis if we can't help anybody with it, right? It's like, if we got a great product, but no, it never gets in anybody's hands, then it's not really helping anyone. So that's what this is all about. And so Leo essentially he hit a breaking point. And that July last summer, he said to me, look, if you're willing, I would love for you to let me just kind of open your business up to me and show me what you do from the second you walk in the office every day to the point at which you punch out. And I said, sure. And we spent 27 hours together over the next 14 weeks, pretty much building out what we do here at Libertas. From the point we walk into the door to the time we leave every day, and how we run the company and provide client service and generate new revenue and so on and so forth. So it starts with, really, you got to have a base. You can't help everyone. And when you start growing, one of the biggest mistakes I think people can make is not being ready for that growth. And so with that, a mistake someone might make is they might start implementing some of the things that, that I'm teaching. And then all of a sudden they're taking everybody who walks in the door, and now they have no time. Like you're bogged down, because it does take a tremendous amount of time to do this and do it right. So my belief is that you have to have a minimum. Unless you're just getting started, that is. So, if you're just getting started, you don't have to have a minimum. But I mean, I think most of the people watching this or listening to this are probably have been in the business for a little while anyway, a couple of years at least. So, the minimum is really so that we can help the right people and be profitable. And that was one of the hardest things that I did in my career, was to start my first minimum. Then it was even harder to raise it, and it was harder to raise it again. I've raised my minimum twice, and the reason it's so difficult is because you feel, if you're a good advisor, if you're a good portfolio manager, you want to help people. And so one of the worst feelings in the world is turning somebody away. Um, so. Uh, but you can't work with everybody because it's just not profitable. And at the end of the day, you'll find yourself with lots of clients and not enough money to do your job. And then you just got an unprofitable business that you can never sell. So that's the why. Where should you start? I think the first place you should start is you should look at your annual revenue. So if you look at the total amount of gross revenue you're earning, whatever that is should be where your minimum starts. If you're a solo advisor, solo portfolio manager, and you're making 100 grand a year, then 100 grand should be your minimum. That should be your minimum new client. If you're around 250 or higher, then it should be 250. If it's a 500,000, then it should be a 500,000. The common question we'll start to get is, well, what if I have a team? And the answer to that is, well, you should have a firm minimum that is the minimum that you bring onto your company. And then from there, you can have a personal minimum. So different advisors, different portfolio managers can have different minimums based on, their level of expertise, their tenure in the company, and so on and so forth. So, your, like, for instance, at our office, the firm minimum's a 500,000, and then my personal minimum is 1 million. So if somebody doesn't meet your minimum, though, and this is one of the best things we ever did, because I mentioned earlier that I have a really, big soft spot for helping people, and I really have a hard time sticking to the minimum, right? Or I did anyway. I used to. What helped me get over my tendencies to skip to, you know, waive the minimum, say, "Oh, I want to help you because I like you," was we started charging a fixed fee for what we do for people. Now, this is going to bleed over outside of portfolio management. This gets into more solutions-based holistic planning, which I know that not everybody might be interested in. But if you are interested in it, if you are implementing it now, or if you want to implement, this is huge for growing your practice, because I personally have the belief that most people don't want to go out there and find somebody to just manage their money and then hope that they make it. Now, that, don't get me wrong, there's definitely, investors out there that have so much money, they've built their own spreadsheet and they know they'll be fine. They know they're going to retire on time, they'll never run out, and it'll be fine. It's because they're so wealthy. But most people don't feel that way, and even many wealthy people don't feel that way. In fact, many times that's why they're so wealthy, is because they've been chasing themselves in a year or 2 years or 5 years for so long, and so they're conservative people, and they don't feel rich. I mean, ask some of your wealthiest clients, do you feel rich? And they're not going to say yes. None of them are going to say yes. So, what we started doing is we started implementing a $4,000 fixed fee to take people through our entire financial planning service, which is, I'll get into it in a second here, but it's 3 meetings in addition to an intro call, along with a full-blown financial plan. And then they can come in one time for a review meeting. And after that, if they want to renew for the following year, it's $2,000 every year thereafter, until they hit that $500,000 minimum. Once they get close to the $500,000 minimum, we can flip them over to full service, charge an AUM fee, and we're good to go. And now they're on the full service schedule, and they don't have to worry about paying any hard dollar fees any longer. For
I have a
those that are
couple
wondering,
questions.
sorry, go ahead. Yeah.
Oh, so, um, how do you treat families? Like, if you have a father or, a husband and wife that reach your minimum, but then they want to bring their kids in and build that relationship, do they go with the family minimum, or do they start at their own, or?
Yeah, I love that question, because watch this. So we waive our minimum for all family members: brothers, sisters, aunts, uncles, cousins, mom, dad, sisters. Doesn't make a difference. So we not only waive our minimum, because we're never going to turn away a family member. We do have to draw a line somewhere. We can't. One of our clients has asked one time, like, "Hey, can you do this family discount for our friends too?" And it's like, I haven't really done the math to find out if that would work. I imagine it probably would, honestly, but tracking it might be a problem. So the way our family discount works is, not only do we waive our minimum, but anybody in the family is part of this whole discount in terms of our fee. The portfolios are all aggregated behind the scenes by our operations director here at our office. So when we look at, let's just say there's 3 separate families, they're all aggregated together and treated like one household. And then whatever that total household is, that's where they go in the fee break point. So one client's never going to know how much the other client has in terms of assets, and vice versa. Everything's kept confidential, and it's done behind the scenes. But there are occasions we joke that, when you've got a family of, let's just say, brother and sister that are, married to their own respective spouses, and the total portfolio value is 5.5 million between the two of them, and then their son comes in with 25 grand and sees the fee is so low, like, whoa, my parents must have a lot of money. It's like, all right, enough, stop with your math. But anyway, so that's a great question. And I do think you have to waive your minimum for family members. One, because that's ridiculous to turn away family. I think out of principle. But the other reason is because if you're going to run a multi-generational business, you sure don't want to be passing on the kids. I mean, they'll go find somebody else, right?
Definitely. Yeah.
The last thing I was going to share here is that Leo also said this was the hardest thing to do. So when I went through this process with him and built out our consulting firm, and basically he was the kind of the guinea pig, so to speak. It wasn't meant to be that way. I didn't plan on starting this thing, and just after I was done, I was like, man, I might as well just started this, since it was something I was going to do in 15 years. Why let it sit on the shelf forever? So Leo really struggled with this, but as soon as he started it just, I mean, it's amazing how the stars just align and things just kind of happen. And I think a lot of it has to do with the fact that you're spending your time on the right people, and you're not bogged down doing so much work that you can't allow other people into your funnel. You know what I mean?
How do you make that mental shift? That's what I'm curious about. Like if you're so used to taking on, I guess, some of these clients that wouldn't fall under your new minimum, but internally you're like, hey, I want to help out this client. I know I got a really great program over here that I can put them in. Um, but now they don't reach your minimum and now you can't bring them on. Like, how do you
Yep.
make that shift if that's the kind of personality you have?
I have two answers. One is you can have a lower firm minimum with other advisors. If you have other advisors on your team, you can't have a lower firm minimum if you don't have two more advisors, obviously. But if you do have another advisor on your team, you can have a lower firm minimum so that you can still help that person as a team, but you're not helping them yourself. That's the first and easy answer. That's the cheater's answer, to be honest. The hard answer is, and honestly, it took me a really long time to figure this out. But once I figured it out, and once I had the conversation with a couple of my peers, it just clicked. And that was, you mentioned you just had your second son. I have two
Yes.
kids. I have two boys, 14 and 11. And when I raised our minimum from a 250 to a half million, which was, I think, 3 years ago now at this point, it was difficult. But then when I started realizing I'm choosing, but not between helping or not helping that widow or that divorcee that just, kind of got screwed in their divorce and now they don't have enough money to meet our minimum. I'm not choosing between helping them and not. I'm choosing between helping them and being with my family. And if I choose them, then I have to look at myself in the mirror and say, I chose that I would rather spend more time working with people it hurts to say, but I just don't have time for right now, unless I hire another advisor that I could lower a firm minimum for so we can help that group of people. And I'm going to go home late at night, and I'm going to work on the weekends, and I'm just not going to have time for my family. And I always thought that I would be coaching lots of teams, when as I got older, and because I mean, I got married, dated for 3 years, married for 7 before we had our first. And here it is. It's like, kids are 14 and 11, and I'm just kind of started coaching a couple of years ago. It's amazing how fast time goes. So you have to reframe your mindset into thinking you're not choosing to help or not help them, which will make you feel bad. You're choosing between your business and your family. Does that make sense?
Yeah, no, it's resonating. I'm thinking about it in the background right now because that's a
Yeah.
topic that's top of mind at this time for me.
Yeah. Start early, right? So the next step, and please keep stopping me if we want to kind of stop for questions. The first step in our process is an intro call. It doesn't matter whether the person comes from a referral, a web lead, they find us online, they just, a networking event we attended or something like that. So it's a 30-minute call, and the whole purpose is to screen, qualify the person, and triage. And think of it like nurse, a nurse triaging patients. We want to provide them in the beginning of the call with a quick agenda. What we're going to do today, Ben, is we're going to get to know you a little bit more, first and foremost. I'm sure we'll have some questions for you. And then the second thing we're going to do is we're going to go over our process and how we work with our clients. And at the end of the day, we're going to open it up for questions for you to ask any questions you have. We've heard it all in 23 years, so nothing you ask is off base. Feel free, to ask about anything you want. And then at the end of the call, there's going to be 3 outcomes. Either A, we're going to find out for whatever reason. I have no idea what that reason is right now, but we'll find out for whatever reason. Option 1 is we're just not a good fit. We're just going to part as friends. That's it. At least you know who we are. We got to know each other. And if something changes down the road, we can revisit another call like this one. Option 2 is we find out we're a great fit, but for whatever reason, it's just bad timing. Like we had somebody where we had an intro call, I believe it was yesterday, with a new prospective client. who very much meets our minimum, but they're having a baby in December. He's just started a new job, and it's like, you know what? Let me talk to my wife. Let's talk in 3 months, and let's revisit the conversation in early fall. So maybe that's the option. And then option three is we find we're a great fit and we want to get the ball rolling, and we schedule our discovery meeting, which is the first step in our process that I'll get into in a second. And then, were you gonna say something?
No, no.
Okay, sorry. So then I pass the questions on to Kim at our office. She's the financial advisor that works with me. And then she starts asking questions, starting with what I call soft questions. Things like, um, how old are you? Where do you live? Do you own your home? Is there a mortgage on it? What do you think it's worth today? What are your salaries? Where do you work? What's your title? And then because you don't want to just jump into assets. I mean, it's kind of threatening, you know what I mean? If not, maybe it feels like somebody's, threatening your privacy. But then you start getting into the what we call inventory. I think I have it even written down that way here. So I like to say, okay, we're gonna get in it. Once we get them to answer some questions and they've kind of talked about their story, and then we start asking the soft questions, I'll say, okay, we're gonna get an inventory here. Because that doesn't sound like, hey, I want to find out how much money you have, which sounds really abrasive, you know? So getting an inventory it's like any attorney would do in an estate plan, right? And that's all we're doing is we're trying to get an inventory. And then after we get all the information we need, which includes some information about whether they have an estate plan or not, what their life insurance is currently, things like that. Then we want to explain our process. And when we go through that process, it goes like this. We said the first time we meet with somebody is a really long meeting. It's called a discovery meeting, and it's 2.5 hours long. There have been some that we've gotten done in less than 2 hours. There's also been some that we've had to split up into two meetings because it was 4.5 hours long, which is usually business owners. But basically, on that first meeting, we're going to pepper you with questions. It's going to be exhausting, but we're getting everything we need to put together a full-blown comprehensive retirement plan, retirement income plan, investment management recommendations, tax planning, estate planning, and insurance planning recommendations on the third meeting. So that's the first step in the process, is the discovery meeting. Second step is called an education meeting. It's only 60 minutes long, but on that visit, we're going to teach you about how we're structured as a fiduciary, what that means to you and your family. We're going to talk about some investments 101 from a 30,000-foot view, treat you like a fifth grader. And then we're going to go over our different model portfolios, strategies, the differences and similarities between them, strengths, weaknesses. And then we'll finish talking a little bit about market risk volatility and kind of getting an idea how you feel about risk and when it comes to your money and emotionally speaking. And then the third meeting is the financial planning meeting. In that visit, we're going to go over everything we've learned about you in this call, the discovery meeting, the education meeting. We're going to put together a cash flow analysis that goes out until you quit working, which is important, obviously, or as I like to say, when you'd like to have the choice to quit working. And then more importantly, we're going to do cash flow going out in the future to look at things like how often are we going to replace our vehicles and what's that going to cost us net after trade-in? How often are we going to go on big international trips? Do we want to take our family on some trips, like maybe get a beach house once every 2 years and just have everybody just has to get themselves there? Domestic travel, road trips to visit kids and grandkids. Do we want to downsize someday? Do we want to move to another state? So everything goes into this plan. We extrapolate it out in the future, and then we want to find out, A, are we on track to quit working when you'd like to make work optional? And if so, great. And if not, what levers do we need to pull to get there? And more importantly, what's the minimum rate of return we need to earn between now and the end of your life, not retirement, but the end of your life? Because I think people get this the industry, financial planning industry, has taught people that, we need to be more and more conservative until you hit retirement. Then in retirement, you need to be more conservative. It's almost like you're dying it when you retire, but you're not, obviously. You've got another 30 years to go, maybe more. We have to look out way into the future and find out, what do we have? What's our bogey? What's the Fox index? We're not managing our clients' portfolios compared to the S&P 500 or the NASDAQ, which, by the way, the S&P has been the best performing index in the world for 14 years. I mean, good luck trying to beat an index every quarter when it's the best performing index in the world. Maybe move to Singapore, and then you can beat the S&P because you can, or I'm sorry, you can beat the Singapore index because you live in Singapore. It's called home country bias, by the way. But anyway, I digress. I'm going off the rails here. So at the end of that process, we go over some big picture advice, like ancillary advice for things like tax plan, estate planning. We go over investment recommendations, of course, that goes without saying. Insurance recommendations for everything from home and auto and liability to health insurance, life insurance needs analyses, and so on. And at the end of that third meeting, that's when we say, okay, are we going to do this together or not? And if we do, and roughly 8.5 out of 10 people who go through this process end up coming on board, then it's on to transferring accounts. We set up a 45-day meeting thereafter to, just make sure we're keeping momentum going for referrals to CPAs, attorneys. And so once I've explained this whole process to them from the beginning to the end, then I just open it up for questions. And I usually joke and say, I feel like I just opened up a fire hose. And it was funny. We had a firefighter on the phone with us the other day. So that was kind of accidental, but anyway. And then at the end, I'll always say, would you like to schedule discovery meeting via email, or you want to set it up now? And by the way, one of the things you can learn to do with your boys as they get older is if you give people two choices, you always want to pick what you want them to choose as the second choice, and they'll usually pick that. So, when I was joking I was doing a presentation for another RIA firm last week, and I told them that, in Christmas time, I was trying to get prospective clients to wait till after the holidays to meet because I wanted to spend time with my family. So I did the reverse. I said, say, you want to set the next meeting now, or you just want to wait till after the first? And they're like, let's just set it up now. I'm like, God, it didn't work. I was trying to spend more time with my family. But anyway. And then
So
if they
a
start,
question
yeah,
within this process, what is one area where you feel like it's missed when advisors are going through this process, if that makes sense?
two. I think there's two main areas. The first is the discovery meeting is all about numbers for most people and doesn't have enough of the good questions that really matter in people's lives. And then the second is that most firms just skip the education meeting altogether. They don't have one. They meet with them, they do discover, then they do what they call a proposal, which sure does sound like sales to me. You know what I mean? So we're not trying to sell people. We're trying to solve problems.
Oh, that's interesting because then they don't feel like they're really part of the process.
Sure. It's a
That
partnership, right? I mean, that we work for them, not the other way around. And like a doctor diagnoses, ailments and issues that need to be, diagnosed and treated. We're doing the same thing. We're just doing it with numbers. It's not all that different. Sometimes it's even, we find ourselves in the emergency room metaphorically, right? Um, but anyway, so yeah. And then the last thing here, I'll just share a couple more things. One is that if usually people are not back on their heels after this call. I mean, you'll start to feel like you're already friends pretty quickly. And at the end, if they're like one of these people who are maybe a little bit more, I don't know, just cautious in general, just a cautious person. Maybe they've had a bad experience in the past and they're still, those scars are still fresh. Just be the first to lay off. Like, don't push them. Be the first to lay off and say, look, why don't you if they're not ready to schedule that discovery meeting right away, then what I'll typically say is, why don't you give it the weekend to think about this? We'll give you a call next week or the week after, unless you think we would wait longer. Like, what's the hurry? We're not in a hurry. But and then we follow up with after the call's over with, usually by the end of the day, we follow up with an email just saying, hey, great talking to you today. Good, it was nice getting to know you a little bit better. And we have this piece of software that's really inexpensive that you can buy called Asset Map. And we take everything we learned on that call, throw it in an asset map, export it as a PDF, and then throw it out onto the into their email. So yeah, so that's kind of how that works. Any questions so far?
No, I've asked the ones that have come to mind.
Okay. So Leo calls this next part the secret weapon. This is the discovery meeting. I know I explained our process, but the discovery meeting itself, like I said, it's a 2.5 hour exhaustive meeting. It's an 18-page Google Doc with tons and tons of questions. Some of the questions you imagine we would ask, others you're like, why in the world are you asking me this question? Questions like, how important is your religion when it comes to your finances? How important is your schools you attended when it comes to your finances? Things like that. It automatically, when we're done with it, sends the results to one of our staff members via email, which makes it easy. But it's really all about the time. All this is, like I said, when you said what is the thing that's missing usually, and I think that when I say the discovery meeting, not asking the right questions is part of it, but that extra education meeting is spending more time with people and giving them your time to teach them, because nobody wants to be walked into the doctor's office, sit down and wait for the doctor to show up. Doctor shows up, looks at the chart, barely looks at you, and says, "Okay, this is what's wrong. Good to see you. See you next year." People want more time. This is important. Next to your health, this is probably the next most important thing in your life. So lots of deep personal questions in this questionnaire, what makes it work. And at the end of it, we do this thing where it's your personal story. You're basically sharing your why. Why do you do what you do for a living? And I'm not going to get into mine today because in the interest of time. I'm just looking at our Zoom time here. But I have a 3-minute personal story that I tell about coming home every day from school and stopping at my dad's office, watching him interact with his patients, and thinking about how someday I wanted to be like him. I wanted to have an office where I helped people, sincerely helped people, and made an impact in their lives, and protected them, saved them from bad advice. So, that's what I do today. And then we use the information we have and we learn in the discovery meeting to build something called a mind map, which is built using a piece of software called MindJet. I think they might have changed the name, but that's what it used to be called. But that is also extremely inexpensive. And then at the end of the day, you know them better than anybody else, probably in their family. I mean, maybe spouses know each other still better than you know them at that moment, but you know them better than anybody. And that's why, again, that sharing your why and who you are, where you came from, and why you are where you are is crucial too, because they might be feeling a little bit vulnerable. Like you know so much about them, but they know nothing about you, right? So at this point, and we haven't even gotten into the education meeting. We haven't even gotten into financial planning and the solutions, the portfolio management. At this point, they're probably comfortable enough to hire you. I mean, at this juncture, honestly. Um, and then this was a big hot topic at the NAAIM conference, and I think it's going to resonate with most people. But explaining portfolio management is one of, especially with this crowd, with like my people, my CMT people, it's so crucial because we love it so much. Like we were talking off air, Ben, about how much I love, we love doing this. It's fun, and if you get somebody to listen to you, you don't want to stop talking about it because it's just such cool stuff. The problem is most people just don't care. That's the truth. So as part of the education meeting, your goal as an advisor, a portfolio manager, whatever you call yourself, should be able to create an extremely simple explanation of your process. I mean, the simpler the better. It's as the saying goes, if you can teach it to a fifth grader, then that shows how intelligent you are. Not using, really, really big words like standard deviation and Sharpe ratios and Sortino ratios. You know, they might say, wow, he's really smart, but they might also be really intimidated and not want to work with somebody who doesn't know how to talk to him. It's like going to the doctor's office and, they're explaining all the different things that using words you've never heard of. You can walk out of there, don't even know what's wrong with you. Go home, tell your wife, like, I don't know. Well, so what'd they find? I'm like, I don't really know. I can't pronounce it. Too many syllables. But don't teach them how you manage portfolios. There might be that one client every 2 years that comes in that really wants to dig into the weeds. And if you want to set up a coffee appointment and have your laptop out and teach them how you do what you do, have at it. That's fine. But it can't be part of the process. So you don't want to teach them how you do. You want to teach them, you want to use analogies. And if it's possible, either use analogies, like for me, I use a lot of analogies based on whatever sports are going on at the time. So like we just had the Stanley Cup, it just was over with. I might use a hockey analogy. Before that, it was March Madness, things like that. Use pictures, but not charts when at all possible. Charts are just going to confuse people. To this day, I love candlestick charts. They're my favorites. But to the average person, I didn't realize how ugly they are to most people and how confusing they look. When to me, it's like a candlestick shows so much information that it's like the perfect chart to me. But anyway, and then again, everybody that's listening or watching this has a really impressive process. But again, they don't want to know. They don't care. That's why they're paying you. So that what they want to know is, am I going to be okay? Am I going to quit working when I want to? I used to say this all the time. I haven't said it in a long time, but I've never had a client who said to me, Adam, I don't care about my wife, my husband. I really don't care about my kids either. My goal in life is to figure out how to manage portfolios, trade options, trend follow, and be at the S&P 500 every quarter. That's my goal in life. Nobody says that. So they don't care. It's really about relationships, not math and technical analysis. And that's it's unfortunate for us because we do love this so much and we like to talk about it. Were you gonna say something? Sorry.
Yeah, well, I was just thinking, when I was in the industry and I was waiting for kind of the first big tough year that we had, and that came in 2020 for me.
Hmm.
Um, and I was really nervous. I mean, without going into we use a lot of leverage over here at Scarecrow. We can have higher standard deviations and all that stuff, but I knew when that year was there, I'm like, it's going to be a big test for how well I'm keeping my relationships with my clients because, if I don't have that relationship there, they're just going to bow out at the worst time and not be a part of this long-term plan that we have. Um, and I don't know, that was just resonating with me in here and also the keeping it simple part is interesting because we have where we deal with retail clients, we also have a seller signal off to advisors, and the conversations and the way I explain what we do completely different. And I've had to split up my days in the week. Like on Monday, Wednesday, Friday, I'm dealing with retail clients, and Tuesdays and Thursdays is when I set up advisor calls. Because if I don't make the mental shift in my mind to
Yep.
jump and how to explain it, I can start talking to a client like I talked to an advisor, and they're going to sit there like, oh, what's going on?
Right.
So, yeah.
And honestly, even the advisors, when you're talking to them and teaching them, I'm sure it's good for that. They need to know, right?
Yep.
They can't just be order takers. But at the same time, they got to be careful not to take that and regurgitate it right back to the retail client for the same reason that you don't want to do it yourself.
Yes. Oh, and I've also gotten better at making them aware of like, well, this is how you and I want to understand it. But when I'm talking over on Scarecrow Advisor's side, this is how I explain it, just to give you kind of an idea. And they go, oh, okay, yeah, no, that makes a lot of sense to kind of simplify it down to their level. Because yeah, not a lot of clients, like you say, come in and really want to understand the nitty gritty.
No.
There is that one or two every once in a while. And we love to talk to them, but
Yep. It's fun.
it's not a lot.
Yeah. So, one of the things I learned the hard way in my career, my first test was I started my career 10 days before the World Trade Center went down. And then I was yeah, obviously, still in the market and still doing what I'm doing with a larger company during the 07, 08, 09 crisis, So it's been an interesting ride, for my in terms of when I started and what I've been through so far. But one of the things I learned the hard way was as much as I love technical analysis, and I do think that it really is, if we had to pick a superior strategy, technical analysis wins, in my opinion. But I do think there's a place for strategic asset management, whether that be because somebody's younger, whether that be because not every client is going to have the same philosophical beliefs that we do. And in fact, what we do at our office is we split our portfolios with not all clients, but most clients own some strategic and some tactical because the market's going to act differently at different times. It's like a card dealer, right? And depending on the cards it deals, sometimes strategic is going to work out. Those big whipsaws where you're like, man, I wish I would have been in the market. Well, what if we still have money that's in the market? What's wrong with that, right? And we have to be less rigid, I think, as technicians, which I was very much guilty of. So aside from managing both types of models, the other thing I like to do in explaining relative strength, this is an example of one of my analogies. I mentioned March Madness. It's like we're not investing in all the investments out there, all the teams. We just want to pick the playoff teams. We're not trying to buy the Super Bowl winner, but we'll own the Super Bowl winner, by the way. We'll own them. We're not putting all our money on what we hope will be the Super Bowl winner. And then with tactical, I like to treat it like tornado sirens. And it's always nice to have, a tornado bunker when that tornado does show up every once in a while. Granted, it takes about 7 tornado sirens before you actually get a tornado, is the statistic. And you feel really stupid when your neighbor across the street's calling you up and saying, "Hey, did you see that pass?" And you're like, "I was in the basement. There was a tornado siren. Didn't you go to the basement?" There's never tornadoes. And it's just like you see on Twitter. There's never going to be a market crash. But obviously, there's no shortage of bulls and bears on both sides of the equation. But bottom line here is keep it simple. Simpler is better. I'm almost done here. Again, I whittled this down, but the last piece is the financial planning meeting, hour and a half long, typically maybe a little less. First thing we do is we go over the mind map. This is what an output of the mind map looks like. And now it was 2 meetings ago that we got this information, so it's really a nice little tiny, tiny, tiny summary of some of the main points we learned in that discovery meeting, and it just goes to show how close attention we're paying to what our clients are saying and the answers to the questions we're asking. And then from there, during the financial planning meeting, and this is, as Leo says here, this meeting and how it's run is absolutely crucial to building trust and bringing on new clients. I agree with him. Although I think this whole process is like, it's like spokes on a wheel. If you're missing a couple spokes, the wheel's not going to go so well. But the whole financial planning meeting is answering the question every client has been asking their entire life, which is, am I going to be okay? Like, and that's when the market's crashing, call it 2020 or the next time. That's all they want to know. Am I going to be okay? And and maybe a couple might want to know, what did you do and why? Like, what are you doing about this? Tell them, and that's it. Keep it simple. Today, people are buying solutions, not portfolios. Um, they want to know if they're going to be able to make work optional when they want to, if their money's going to last longer than they do. And they just want to know if they're going to be okay. So it doesn't matter what software you use, Navaplan, Money Guide Pro, eMoney, they all work, I'm sure. I mean, we use Money Guide Pro at our office. But going beyond financial cash flow analysis and portfolio recommendations to talk about things like retirement tax, insurance, estate planning, and then having a good network. I have a good network of what I call my bench and my starters. So estate planning attorney, two of them. CPAs for big clients, businesses, CPA for smaller clients. And like, for M&A, two different business brokers, a business banker, a corporate attorney, an ESOP attorney. So having all these people, so when people need help, I can be the quarterback, or we as the firm can be the quarterback to help them create more of those solutions. And then you can tie in this meeting what you learned from them in the first two meetings. And assumptively, at the end of the financial planning review meeting, what we're doing is we're going over our fee schedule again, our family discount, and pretty much two slides of here's what you can expect if you become a client. And at the end of that meeting, usually it's okay, here's where we've been, intro call, discovery meeting, education meeting. Today was the financial planning meeting. How do you feel? Next steps are to set up paperwork, with our operations director. Everything's DocuSign these days. And you wait and usually say, okay, let's go. That's it. That's kind of how the process works. Every once in a while, somebody says, well, let's think about it. And that always surprises me. But that's that 1 or 1.5 out of 10 that maybe it's just not a good fit. And chances are, by the way, that if it's not a good fit for them, it's not a good fit for you either. It's like dating, right? If I love you, but you don't love me back, it's probably not going to be the best marriage in the world. So the last thing I'll just burn through here real quick is your website it's crucial. I think one of the crimes we have in this industry as numbers people is we don't have the best design. Well, we're just not very good at design. We'll just say that. It's got to have a good website. It needs to be revised every 5 years or so, at least revisited. It's got to explicitly say what you do and who you do it for. So, our website, we do retirement planning and investment management, fiduciary driven retirement planning and investment management for working professionals, business. And we have a separate website called Elevate, and it's elevateandexit.com. We work with business owners exclusively. And that just says right there, we're working with business owners to help them grow their enterprise value so they can increase their net worth and sell someday. That's what we do. And that's who we work with. So when they go to the website, they need to know that that looks like me, you could help me. And then what you want to do is you want to have lots of calls to action to the point where you feel it's annoyingly overkill, because it's going to be overkill to you, but it's not overkill to them, to the public. They're going to spend their time. The statistics say they're going to Google you, then they're going to spend about 7 seconds on your homepage. They're going to spend more time on your about page looking at you to see if what you look like, your bio. Then from there, it's clicking on a call to action or going to your contact page or not. That's it. Most of the other stuff's fluff. And so again, they want to know who you are. So try not to include stock images and like your stereotypical mannequins, obviously they're real people, but you know what I'm saying? And then again, the most important pages on your website, your homepage, about us, team, and then a contact, and then all those calls to action. So that's huge. And I think what I'm going to do in the interest of time, as opposed to going over a big, huge thing, well, here, real quick, Google reviews. Before COVID, people say they find their financial advisors through their friends, their neighbors, their CPAs, and their attorneys. I think that some people still find their advisors that way, maybe from their attorneys and CPAs more than friends and neighbors. But since COVID, people are Googling. They're doing research now. So they go online, just like you would go online to look for a plumber, HVAC person, somebody to clean your pool, a car detailer, and they want to see how many stars you have. And most people aren't going to call you if you have less than 4.5. So people are Googling now, CPAs, doctors, attorneys, and yes, us too. And they're looking for the people who have Google reviews are getting all your clients. And I say that just like that. I'm not saying you, Ben, but when I'm saying to the audience, if you don't have a Google review, then your clients that you could be helping and saving are going somewhere else. And that's just how it is. So we send out we have templates, we send out surveys to clients, then we send out, basically just a quick request for them to give us a review. The way the law is written now for RIAs is that as long as we don't have control of the review, there's nothing wrong with the review. You can't take a review and put it on your website because you can control what's written there. But if they write it and it's on a third party website, then we can't control it. So when I Googled, this was just before the NAAIM conference, the Uncommon Knowledge Conference, I Googled financial planner near me or financial advisor near me. And you can see here in my area, what was really interesting was Antolino here still has just one review. Nothing's changed in the last year or two. Frazier, same story. Waller, same story. One review, and it's a 1-star review, heaven forbid. And then Columbus Wealth Management, which I'm sure they're wonderful people, but I've never heard of them. And then Rebel Financial, still never heard of them either. They've got more reviews than we do, out of the blue, just like, and I guarantee you they are getting clients as a result of the fact that they're putting themselves out there like this. So In summary, the way this all worked is, there's Leo wanted a silver bullet. I think that's what everybody wants. They want, like, show me the sauce and, let's do it. Let's eat. But the only way to really truly grow and build a referable business and become re-energized, that's really even more important about your practice, is to avoid mistakes others have made before you, and then consistently do a lot of different little things when it comes to lead generation, marketing to centers of influence, and there's top-notch client service above all. And then you'll start to see your practice flourish, but it's going to be a ton of fun along the way. It's like you'll get reinvigorated. You'll be so excited. It's like it'll be fun again. It won't be a job anymore. So before I close, just want to thank you, Ben, for having me on. Susan, I want to thank you again. I'm not sure if you're in the background listening, but I want to thank you again for asking me to speak at the NAAIM conference. It was awesome. It was a lot of fun. And then Rich and John, if it weren't for the two of them, I wouldn't have even talked to Susan. So I just want to get my thank yous out here. And then last but not least, I'll just finish up by saying, we talked about Leo's breaking point. Smart guy, approachable, tenured in technical analysis, and he just gives me a call and says he's not going well. Things aren't going well. We start going through this whole program, which wasn't supposed to be a program. It was just me helping a friend. 14 weeks later, he brings in $4.8 million signed with another 12.6 million in the pipeline. Again, in 14 weeks. That's it. And I'm not saying that to pound my chest, but he kept trying to he kept trying to pay me. And I kept telling him I'm not taking any money because it was just me helping a friend. But, it was nothing's more fulfilling than seeing somebody succeed like this, because we're not just succeeding as portfolio managers and financial advisors. When we succeed, our clients succeed, which is really, really cool. So with that all being said, I started Adrenaline, a consulting firm. I'm not going to sit here and plug it all day, but if anybody wants to become one of the 20 founding members, I'm limiting it to 20. We're getting close to 10 right now, and I really haven't started marketing yet. All I've marketed it to was the NAAIM audience and then one other RIA firm so far, and that's it. But if you have questions, we would do an intro call to learn about what you want to get out of it, whether it's even a good fit for us, whether we can help you. And then from there, we're going to start probably sometime in September or so in terms of getting the ball rolling and eventually launching the program.
Well, awesome. Well, no, that was great. I learned a lot from there. I get why my team members said that was a good presentation now, and I
Well,
know I
thank
got,
you.
a simplified version. If anybody wants to reach out and ask some more questions, I mean, you gave them the information there at the end, so that's all great. Any other last second thoughts before we hop off and get on to this great weekend?
I guess the only thing I would say was just if you're feeling lost, if you're feeling maybe frustrated, if you're feeling maybe a little bored, if you're not excited to wake up and go to work in the morning, then consider investing in yourself. And that doesn't have to be with me. It can be with I have a coach. Her name's Stephanie Bogan with a company called Limitless. I'm also a member of a community called Good Advisors Finish First. I'm also a member of Carl Richards' Society of Advice. I mean, I have no shortage of mentors myself, and I've always been that person that seeks out mentors to try and get better. Several technical analysis, Greg Morris, Charlie Kirkpatrick, like there's all these people that I've kind of nagged them until they gave me their ear. But I would just, the last thing I would say is just if this needs to be fun, and I shouldn't say it needs to be fun. This should be fun. Our job should be fun, because in what other career can you help people and do so well in life for yourself personally while helping others and helping their families? I mean, there's nothing. I mean, not to mention when you go on vacation, if you're a doctor, if you're an attorney, then you're not only spending money, but you're not billing it for hours either. It's not like that in our business. So we're really lucky people. And if you're feeling stuck, then, reach out to somebody and get some help, because this is way too fun of a business to be feeling in a rut.
No, I definitely agree. Yeah, we're in a great business. Well, Adam, thank you for hopping on
Yeah.
and being a part of this. And I guess we'll catch everybody else next week at the next NAAIM Confidential. Thank you.
Awesome. Thanks so much, Ben.